Holy guacamole, Tesla stock is unhappy today following some massive breaking news. We have everything you need to know. Is this good? Is this bad? Here in this video. Tesla has officially unveiled the new refreshed Model 3 Highland that we have all been waiting for. Let's highlight some of the biggest changes within the Highland. So the range has increased 12%. 50% of the parts in the car are new. They also redesigned the interior with new door cards. Take a look at this. This stands out to me a lot. Depending on the color of your Tesla, you're going to have this interior kind of seam matching that color. This is a multicolor ambient LED interior lighting extending from the dash to the rear seat doors. The center touchscreen is now brighter, has smaller bezels, higher contrast, and is more responsive. More comfortable rear seats, redesigned lower rear bumper. That's what a lot of us have already pointed out. The front seats are also heated, which is the same as the Model 3, but now have ventilation. There's a new speaker bar in the roof, a new 17 speaker sound system up from 14 before. It now includes 2 subwoofers and 2 amplifiers and is more punchy. A 65 watt USB-C charger in the center console so you can charge a laptop. Improved Bluetooth, upgraded microphones, improved Wi-Fi connectability, and my favorite of all, a new 8-inch touchscreen for rear passengers in the back to control climate and enjoy entertainment. This is also the difference between the original Model 3 and now the refreshed Model 3 Highland from the rear. You can also see the Tesla symbol is no longer there, and now it spells out Tesla. In China, the Model 3 now goes for $35,807 for the rear-wheel drive and $40,769 for the long range. Deliveries start in Q4. This makes the Model 3 rear-wheel drive 12% more expensive than before in China. So we effectively have just seen the first price increase from Tesla in a very long time. To the contrary, we are seeing price cuts. One of them is with full self-driving. Full self-driving used to be $15,000. Now it is $12,000, a price cut of $3,000. Tesla has now removed the standard range Model S and Model X in the US and dropped prices up to 19%. The Model X is now eligible for the $7,500 EV tax credit. The Model S long range is now $74,990 from $88,490. The Model S Plaid is now $89,990 from $108,490. These are some very big price cuts. The Model X long range starts at $79,990 from $98,490, and the Model X Plaid is $89,990 from $108,490. Now, you can also get different colors, including black, gray, blue, and red, that are now free on the Model S and the Model X. The Ultra Red color was $3,000 of an additional charge. So you're seeing a lot of discounts here. The refreshed Model 3, like I said, it's 12% more expensive in China. In Australia, it's 7.8% more expensive. Germany, it's 2.4% more expensive. And France, it's 2.4% more expensive. We don't have numbers for the US, so we don't know how much more it's going to be. But we can imagine it's going to be probably 2.5% to 10% higher. All of these price cuts today has sent Tesla stock down 4.5% at the time of recording this video. But when you net everything out and you look at the volume difference of the Model 3 with its 12% price increase in China and similar price increases elsewhere, you actually get potentially improved margins from Tesla. As Gary Black says on Twitter, IQ test. If a Model 3 refresh with 29% of volume is now on average 8% more expensive, and B, the Model S and X with 4% of volume is now 20% cheaper, and C, the price of FSD at a 10% take rate declines 20%, but the take rate increases from 10 to 12.5%, do Tesla margins go up or down? Hint, Tesla Q gets the wrong answer as usual. Margins actually increase dramatically, especially on FSD. Because if your take rate goes up, I mean, that's $12,000 of additional about 90% margins that Tesla will make. So this actually should be very good for Tesla's margins. The stock does not see it that way. Eventually, Wall Street will catch on. This is to your benefit, my friends. As Sawyer Merritt points out on Twitter, because the Model X now starts at under $80,000, it's not only eligible for the $7,500 federal EV tax credit, but it's also now eligible for some state credits. In Colorado, you'll be able to get an additional $5,000 off. A new Model X for $67,490 after incentives. These are more photos of the Highland. As you can see, the taillights are definitely different, and just an overall sleeker look for this vehicle. You also have different styles of wheels as well as what you had before, and that is a look at the front. There is also a little bit of speculation whether or not there is a camera in the front bumper. The Tesla website seems to show one, but we're not officially getting told there is one. Julian Bildo, creative manager for design at Tesla, traveled to Norway to present the new Model 3. You guys can see that in the light. Oh my gosh, that looks so good. I cannot wait to get my hands on one of these bad boys. As Barron says, investors don't want to see more price cuts, but the X and S are relatively low volume vehicles. The bigger deal is the price for the updated Model 3. Higher prices help boost profit margins. Updated vehicles can boost sales volumes. In the US, Tesla sold 112,791 Model 3 sedans in the first half of the year, up about 12% from the same span of 2022. It's growth, but below market growth and well below the growth of the Model 3. In the US, Tesla sold more than 200,000 Ys in the first half of 2023, up more than 50% year over year. Tesla is expected to grow, and new Model 3s are going to help. So when you factor in the price cuts of the S and X, I don't think that really matters too much. FSD, on the other hand, that is very big. If you were on the fence about getting FSD at $15,000, well, there's going to be a much higher conversion rate, or take rate as they call it, of full self-driving at $12,000. This is a chess move. This is exactly what we needed from Tesla, even down to $10,000 per share, because that's all additional revenue and essentially almost profits that Tesla will bring in due to cutting the price of full self-driving. Wall Street does not realize this yet. Again, they will eventually realize this, and it will be seen as a huge positive for Tesla. But not only that, as Barron points out, the fact that Tesla just raised prices, and you're not really seeing that anywhere in China with EVs, this could actually help stop the price war and actually encourage competitors to raise prices, which could be to everyone's benefit. In other news, Tesla submits Gigafactory Mexico's environmental impact report, codenamed Project Mario. Now, according to these documents, Tesla owns 1,561 hectares hectares, I'm not exactly sure how to say that, of land near Cerro La and Cumbres de Montre in Santa Catarina. Tesla plans to build Giga Mexico on 260 hectares out of the over 1,500 that it owns in the area. So what are they going to do with the rest? Are they going to build a lithium mine? We know lithium's basically everywhere. Are they going to plan to build this into an even bigger factory down the line? Both of those seem quite logical to me. All in all, it looks like Giga Mexico might actually start being built pretty soon. We know there's equipment, we know they've kind of been getting things ready, but actual construction has not started yet. This is important because in the second half of 2024, we expect Giga Mexico will start producing vehicles. This is next year in the second half of the year. Very, very exciting as a Tesla stock investor. Construction on Tesla's new Megapack factory in Shanghai is expected to start this month. Production will start less than 9 months later. When fully ramped, Tesla could generate upwards of $50 billion in revenue annually between both their Lathrop and Shanghai megafactories. The Shanghai Megapack factory will initially produce 10,000 megapacks per year. Just at this factory alone, potentially generating over $20 billion in annual revenue for Tesla. Let's put that into a little bit of context. Tesla this year is going to breach $100 billion in annual revenue. So these factories, once they're at scale, could bring in as much as $50 billion a year. That's 50% of Tesla's revenue today. That's not including robotaxi. That's not including the auto business or where it's going to be in the future. But based on today's numbers, these two factories could bring in half of Tesla's revenue today, something Wall Street is not projecting in any of their models. Most people don't even take into consideration energy or storage in their valuation models. Wow, you have a massive opportunity here. They're giving you basically free shares of Tesla at this point. Colorado has released a $6,000 scrappage bonus. This is an EV incentive based on scrapping gas guzzlers. Those eligible for the Vehicle Exchange Colorado program will receive point-of-sale rebates of $6,000 towards purchasing or leasing a new electric vehicle. So basically, when you go to buy your vehicle, it's going to be $6,000 cheaper. That's a very big deal if you're a resident of Colorado. The Malaysian Prime Minister convinced Elon Musk to invest in the country by freeing Tesla and SpaceX from nitty-gritty bureaucracy. He goes on to say that in July, electric car maker Tesla established a regional headquarters in the country and started to sell cars directly to consumers. That same month, Malaysia allowed satellite internet service Starlink, offered by Musk's SpaceX, to start operations in the country. In an interview with Fortune, he says, "I made it clear and blunt to him that he does not need to worry about all of the other nitty-gritty bureaucratic encumbrances that he may face in dealing with some other countries." Malaysia allowed Tesla and SpaceX to sell directly to consumers without working with a local partner like a dealership. This, I don't think, is a big deal because Malaysia is not the biggest market for electric vehicles. They're very much a underdeveloped nation still. But I think this kind of letting Tesla pass through the bureaucracies could flow through to other countries as well, like in India that has 100% import taxes. That's actually crazy. So maybe Malaysia starting to be a little bit more lenient in that region at least could encourage other countries that maybe would be more impactful to Tesla to be a little bit more lenient And that could be very good news. In other EV news, this is very good news for Tesla. BYD, Li Auto, XPeng, and NIO came in with strong deliveries for the month of August. Li Auto delivered 34,914 vehicles, up 2.4% from July's prior number, and beat Li Auto's record of 34,000, up 664% versus a year ago. NIO deliveries came in at 19,000, down 5.5% from July's record, but up 81% year over year. XPeng's deliveries hit 13,690, the highest since June of 2022, and up 43% year over year. And finally, BYD sold a record of 274,000 vehicles in August, up 5% versus July's total, and up 57% versus a year earlier. What can we say? China loves EVs, and Tesla's number is probably very impressive as well. In not so great news for legacy OEMs, Ford has to recall 422,000 vehicles in the United States because of a problem with the rear view camera display that might fail following an earlier camera recall in January of 462,000 vehicles. This will cost Ford a $270 million charge to address the callback. And finally, as we know, the UAW auto strike could start on September 14th, and the president of the United Auto Workers on Thursday filed complaints against General Motors and Stellantis, both of which are accused of failing to respond to union demands amid this year's contract negotiations. This could likely affect Tesla in a positive way, but it could be a bad thing for the economy, especially for regional economies. Like Michigan. I live in Michigan, and there's a lot of UAW workers. If a strike breaks out, that could cost the economy $5 billion a week. Not so great. Tesla's stock at the time of recording this video is down 4.36%, trading at $246.89 per share. If there's one thing you guys take away from this video, the net of reducing the price of full self-driving, leading to a higher conversion rate, reducing the price of the Model S and the Model X while raising the price of the Model 3 and keeping the Model Y price unchanged actually has a positive effect to Tesla's margins. So to me, this sell-off looks more like an algorithmic kind of sell-off because these algorithms are priced to say, hey, sell Tesla stock if they cut the price of FSD or cut the price of any of their models in the US, that is. More so than like a China or a Europe. But specifically in the US, Tesla cuts prices, sell the stock. People will realize this actually will have a net positive to Tesla's margins, and they will buy the stock. So don't be fooled based off of today's over 4% drop. This is not a bad thing. It looks like the option activity is supporting that as well. You have seen 629 orders totaling $169.4 million with a positive order value of 61%. So the vast majority of option buyers are actually buying calls or selling puts, directionally bullish trades. But as we do head into September, seasonally one of the worst months for the markets, things can get choppy out there. Some of the economic data that came out this morning, as we will go over in the next video, I highly recommend you guys stay tuned to the channel. 8 p.m. Eastern Standard Time, like every day, that video is going to be coming out, and it looks like we're going into recession. So when you mix some of these things together, the algos, just selling Tesla stock, bad seasonality of September, and what could be an imminent recession, well, that's not great. So any weakness in Tesla stock very much should be seen as a buying opportunity. And that's exactly what I plan to do. If you guys would like to come hedge out your portfolios, come make some money on any downside in the markets, take that money and put it back into Tesla stock, there's links down below in the description of this video to come join the trading community. We will welcome you with open arms. Now, as far as Tesla's stock itself, if the markets get weak here and you start to get more downside in the broader S&P and the NASDAQ as recession fears really start to take a hold of this market, it's very possible Tesla stock could fall back to about $200 per share. I think things would have to get pretty bad and you would have to see a price cut with the actual Model Y to get Tesla stock under $200 per share. That would be a drop of almost $50 per share from here. I don't foresee that. It's possible, but really, around 200 to 180, that's again your sell your kidney kind of moment to buy as many shares of Tesla as you possibly can. Again, remember, Tesla is not priced for perfection next year. Far from it. Tesla is priced as if we're for sure going into a recession that will hit Tesla pretty dang hard. I'm not willing to make that bet. But in the short term, markets can be pretty erratic, sporadic, and fearful. Your next major support level is around $240 per share, $6 off of where we are right now. If you break under that, next stop is $225. That is where the 100-day moving average is. That is roughly where we bounced back here on August 18th. You gapped down under the 100-day moving average. The next day you gapped above it. So that 100-day moving average at 225 will be very important. If you fall under that, that's where the conversation of 200 becomes a lot more relevant. But for people calling for a big crash, this news we got today just does not support it. So that is everything you need to know on Tesla stock today. Hopefully you guys are caught up to speed and informed. Hit the like button and subscribe to the channel if you are listening to my voice, and share this video with everyone and anyone that invests in Tesla stock or is thinking about investing in Tesla stock. Right now could be a pretty good time to start your first position if you have not done so already. Thank you for watching. My name is Michael Tyler again, and I will see you in the next one.